Hello and welcome to Smart Market Insights here on Kalkine TV. I'm Rachel and today we're going to be shining some light on robust investor lending in Australia in January. Now, many Australians bought investor properties during January, indicating the continued strength of the real estate market in the country. According to the Australian Bureau of Statistics, new investor housing loan commitments rose by 6.1%. The indicator reached a record value of $11 billion. And that's despite ongoing concerns surrounding the new strain of the coronavirus and rising inflation. New loan commitments for investor homes have been rising for 15 continued months, contributing to the ongoing boom in the housing market. The prices in the market have increased at exceptionally high rates, reaching uncomfortably elevated levels. Overall, new loan commitments for housing rose 2.6% during the month, with owner-occupier commitments rising by 1%. This data reflects the overall strength of the housing market, specifically among owner-occupiers. This stems from the fact that despite new loan commitments by investors reaching a record high, their share in the total housing market is only 1/3. The loan commitments towards owner-occupiers form most of the market and have recorded strong growth over the last 18 months. Across the states, investor loan commitments surged at their highest pace across the Australian Capital Territory at 22.8%, followed by Victoria at 11.1% and New South Wales at 9.8%. The rise in investor loan commitments helped the value of total housing loan commitments reach a record high of $33.7 billion during January. As the value of housing loan commitments surged, the value of lending to owner-occupiers was recorded at $22.7 billion in January. However, first-time owner-occupiers took out smaller loans across almost every state in January. In Queensland, the number of owner-occupier first home buyer commitments fell 16.1%, while in Western Australia these commitments declined by 8.1%. However, the average loan size for owner-occupier dwellings rose to a record high of $619,000 in January. The solid rise in the average loan size for owner-occupier dwellings hinted at the rising value of commitments without much change in the number of new loan commitments. For owner-occupier housing, the value of new loan commitments for the construction of new dwellings fell 3.6% in January. The supply chain issues across the globe have impacted various industries, including construction. Rising costs and labour shortages have become a common phenomenon across the sector, leading to the fall of some major organisations. Experts suggest that the coming months will be underpinned by harsher conditions for the construction industry, making it a highly risky sector. Now, the slowdown of new housing loans for construction somehow means that more owner-occupiers are choosing existing dwellings to reside in. The value of new homes taken for purchasing existing dwellings rose 2.3% in January. Alternatively, new loans to purchase new dwellings were higher by 0.3% during the month, but lower by 5.7% compared to a year ago. However, the value of new loan commitments for total construction finance rose 41.6% in January after a rise of 66.6% during December 2021. Well, that's all for now. We'll be back with the exclusive Smart Market Insight show. Till then, keep watching Kalkine TV for all the latest market updates and related insights. I'm Rachel, signing off for now.